So the bears took control on Wall Street yesterday. Goldman Sachs and Apple together shaving 182 points off the Dow Jones Industrial Average as tech stocks overall tanked. We bring in Jonathan Hoenig, hedge fund manager at capitalisttpig.com, and tech analyst Ian Wishingrad to discuss what's going on. Gentlemen, good morning.
Good morning.
Jonathan,
Great
would
you
touch tech stocks here, Jonathan, or do you think they're going to fall some more?
They always say don't catch a falling knife, Lauren. And I have to tell you, tech stocks, I believe they are still falling knives. When you look at a stock, as you said, like Apple, and this isn't just any other stock. Apple is 11% of the NASDAQ. It's almost 5% of the Dow Jones Industrial. These are the names that have led the market higher. So think of stocks essentially as a stool. When you see Apple, when you see Facebook, Goldman Sachs all breaking down, it's tough to want to hold a lot of stocks right now.
What do you think, Ian? Do you think this tech sell-off that we've seen this year, do you think it end in tears, or do you think the market's going to go back up as far as tech stocks are concerned?
No, I tend to agree, and I think catching falling knife is a great way to say it. I think there also was needed to be a correction. I mean, these companies became trillion-dollar companies. I think they were a little overvalued. I know I got out of some of my positions as well, so I don't think it's a bad move at all. I think the only thing that could change it is they say that the economy is doing really well, so in case they blow the doors open in the holiday season, I would expect they're kind of going to settle and go a little lower.
How much lower do they go? That's the question, Jonathan. At what point, at what level do we buy? We're looking at the FANG stocks, the momentum stocks, the high flyers that so many people own. Yeah. How much lower do they actually go?
Well, what's hopeful, Lauren, is that other leadership emerges. I mean, think back to the late 1990s. What essentially you saw was technology stocks take a breather. Microsoft, Cisco sat out for a while other industries emerged. That's what ideally we'd like to see here. And whether it's McDonald's or Coca-Cola, Starbucks, these are all stocks at new 52-week highs. We just want to see new leadership emerge because it's not going to be tech leading us higher as it has for really the better part of the last 5 years.
Do you think, Ian, that we're just resetting our expectations overall, that looking at the big tech stocks, they can't just continue to grow? What Jonathan noted, that some of these older stocks, the value stocks, the consumer stocks, that this is the new leadership. Have we reset our expectations?
Reset our expectations, yes. I'm not sure if it's the new leadership per se, but I do think everyone's looking for where is you're going to have incredible growth, and I'm not really sure where that's going to come from. I think there's still plenty of room because the tech companies do crazy things. All of a sudden, Amazon buys Whole Foods one day, so they could do some crazy consolidation. They could come out with some incredible innovation, but right now, yeah, it feels like these are becoming a little bit more value stocks.
Ian, what is the new leadership to you, though, in the market? The new leadership. You said you don't think it's...
Oh yeah, I don't believe. Yes, I'm not really sure where to look. Honestly, I've been looking. I believe tech is the future of the world, and I don't know where to look for this. Honestly.
Well, if tech is the future of the world, Jonathan, you know, a lot of people are saying Apple caused, basically, that was the catalyst for the big sell-off we saw yesterday, and it's been the catalyst for many of the sell-offs we saw, especially this fall. If Apple is losing its innovation, that's what a lot of analysts are saying.
Well, this is the 800-pound gorilla, Lauren. I mean, you could really say as Apple goes, so goes the nation, certainly the stock market. You probably own Apple. Even if you don't own Apple directly, it's found in your 401k. It's found in an S&P 500 index fund somewhere in there. So this is a ubiquitous stock, one that almost everyone owns. And given the market's breadth, almost 280 new 52-week lows yesterday, only about 70 or 80 new 52-week highs. So the trend writ large is lower for stocks, Apple included.
And I'm going to one-up you on that, Jonathan. As so goes Apple, so goes the nation, so goes the world, because many Asian stocks, especially in Japan, got killed today because of Apple. Jonathan, Ian, thank you guys so much.
Thank you.